The Aussie versus US dollar is down sharply on risk-off sentiment due to the tariffs. We do have the Reserve Bank of Australia's interest rate decision in the new trading day. Recall from the last meeting, they did cut rates for the first time since 2020. This meeting, the vast majority of economists, or if not all of them, say that the central bank is not expected to do anything. There is a small chance, maybe 20% chance, priced in by the market, of a 25 basis point cut due to the concerns about the slower growth. We also saw employment unexpectedly fall by 52.8 thousand versus a gain of 30,000 expected. That may weigh on their decision, or may weigh on their expectations going forward. That's going to be the focus during that meeting. But let's talk about the technicals driving this currency pair in this video. So let's get started. Risk off, or maybe a softer Reserve Bank of Australia, has the pair moving to the downside and trading here today. Currently, the price is down around minus 0.86%, making it one of the biggest movers in the market today. That move to the downside has taken the price below a upward sloping trend line right through here, and also below a swing area through here that was defined by a number of different swing lows and swing highs going back in time. I'm outlining some of those levels through here. Admittedly, the price has moved above and below these levels on a number of different occasions, but you can see the interest in this area, which including the last couple weeks where the low prices came into that area, found support, found support. Today, we broke below that area. That area comes between 0.6254 and 0.6268, and it's going to be now the resistance on any sort of move back to the upside. If the price can stay below this area, the bias remains more to the downside. So be aware of that. Also in play near that area is 50% midpoint. That's of this last move to the upside right through here. That comes in at 0.6247, just below that swing area. So keep that level in mind as well. If it can't get above the 50% retracement, then the sellers are definitely more in control. We can look for a rotation to the downside on any sort of move, corrective move to the upside on today's trading. On the downside, the next key target comes in against a 61.80 near 0.62097. Below that, and we'll start to look toward this swing area through here. Note that in this week, well, that was about 5 weeks ago, the low price came in toward that area, found willing buyers, and then helped to push the price to the upside. But admittedly, the price action since that rise has seen a lot of ups and downs in trading. Last week, or 2 weeks ago, the high price came in short of the previous high for the year, which was up here near the 0.6407 level. That level also happened to correspond with the 38.2% retracement of the move down from the September 2024 high. The 38.2 was just above the high price that we saw back here in the month of February, and that keeps the sellers more in play, or it keeps this move to the downside, this correction, just a normal plain vanilla correction in what is more of a bearish bias for this pair. So all that suggests lower levels for the Aussie versus US dollar. We'll see if the 61.8% retracement does anything for the dip buyers. If it doesn't, then look for further selling pressure with the potential move back down toward our low price for the year. That level comes in at 0.60875. So that's my technical look at the Aussie versus US dollar. Good fortune with your trading. Bye-bye now.